Hello everyone, and thank you for joining today's True Trading webinar. I'm excited to be here with you. My name is Mohammed Azim from Traders United. Rest assured, through webinar house rules, please take the time to read important rules for webinar attendees. Let me start by sharing a little information about myself. I am a certified Elliott Wave analyst, having earned my level 1 certification back in the year 2012 with a score of 93%. This certification deepened my understanding of market behavior, especially through the lens of Elliott Wave theory. In addition to my work as an analyst, I am also an author and educator. I wrote Introduction to Elliott Wave Theory, a book designed to help traders like you build a strong foundation in understanding the intricate structure of market waves. But my expertise does not stop at Elliott Wave. Over the years, I have expanded my knowledge into broader market analysis, diving deep into market trends, chart patterns, and price action strategies. So, whether you are a beginner or an experienced trader, I aim to provide you with valuable insights that will help you navigate and succeed in the Forex markets. With that, let's dive into today's session. So these are the main topics that we are going to cover inside today's webinar. Let me talk about macroeconomic events and data releases. I'm going to cover previous week fundamental analysis. So let's start with federal funds rate, USA. What is the federal funds rate? The federal funds rate is the interest rate at which depository institutions lend reserve balances to other banks overnight. Set by the Federal Open Market Committee, FOMC, this rate serves as the primary tool for implementing US monetary policy and has broad influence over consumers and business borrowing costs, overall liquidity, and inflation. Adjustments to the Federal Reserve federal funds rate are aimed at balancing two primary mandates of the Federal Reserve. Number one is the maximum employment and stable prices. Rate hikes typically signals efforts to curb inflation, while cuts are intended to stimulate economic activity during downturns. Now, on May 7th, 2025, Federal Reserve fund rate decision was 4.5%. So market was expecting Federal Reserve to hold rates steady at 4.5, and this is what we exactly got. The previous number was also 4.5. The forecast was 4.5, and the actual number we got is 4.5 on May 7th, 2025. And this decision would reflect a more cautious stance as inflation shows signs of easing, but labor market data, including the stronger than expected April non-farm payroll data report, indicates the US economy remains robust. So what happened is the Fed holds the rate at 4.50%, and that is in line with the expectations, and obviously that generated a muted response in euro dollar. Let me show you a chart of euro USD currency pair. Now I was talking about a drop in price action below the support level, and this is what we got exactly, because the RSI was overbought over here as well. I will talk more about the euro dollar later. Let's go back to the PowerPoint presentation. So the Fed Chair Powell reiterates a data-dependent approach, and what we got a drop in price action of euro dollar currency pair. So the rate was on hold right at 4.50%, and that is in line with the forecast or with the expectation, you might say. So the overall analysis is that the inflation is slowing, but economic data, including strong job growth, remaining firm. The Fed is expected to stay on the pause, allowing more time to evaluate the lagged effects of prior hikes. Market participants, obviously, they pay close attention to the FOMC statement and Jerome Powell's press conference for clues on future price policy or future rate policy moves. So the rate remains the same, and this means the U.S. economy is showing a sign of strength, and that is the reason why we got a drop in price action of euro dollar. This means United States dollar is becoming strong and euro is becoming weak overall. Next one is the unemployment rate in Canada, and the date was May 9th, 2025. The previous number was 6.7. The forecast was 6.8, and the actual number we got is 6.9%. So let's talk a little bit about what is unemployment rate. Canada's unemployment rate measures the percentage of the labor force that is jobless but actively seeking employment. Now, this data is actually released by the Statistics Canada. It serves as a critical gauge of the nation's labor market health and broader economic momentum. Now, as you notice, that the previous number was 6.7%, and we were expecting a slowdown in the economy of Canada at 6.8%, meaning we were expecting more jobless people. In other words, we were expecting unemployment rate to actually increase from 6.7% to 6.8%, but the actual number that we got is 6.9%, which is even greater than the expectation or the forecasted level. And what happened after that is, let me show you the chart of USD CAD here. We got a bullish price action in USD CAD currency pair. So this means the United States dollar is becoming strong, and the Canadian dollar or the USD the CAD is moving up. So this means Canadian dollar is becoming weak and the United States dollar is becoming strong. This also shows us um, you know the number, the 6.9% unemployment rate is high as compared to the previous number, the 6.7. It even beat the expectation. The expectation was 6.8. We got 6.9. So it means more people are unemployed in Canada, and that's not good for the Canadian economy. And due to this reason, we got a bullish price action in USD CAD currency pair. I was, by the way, this is what I told you guys, that based on the expectation of 6.8% as compared to the previous number. So overall conclusion is that we got the report and the USD CAD started to first turn sideways and then rallied up. Okay, and I would say this disappointing data has now shifted sentiment in the favor of US dollar, with further upside possible if coming Canadian data continues to underperform. Traders will watch closely for Bank of Canada commentary and the US inflation numbers as the next catalysts. Next one, we discussed about the euro dollar and Aussie dollar currency pair. Let's take a look at euro USD. So I was expecting a drop in price action of euro dollar currency pair. If you take a look at a weekly time frame, the RSI hit the 70 level, and I showed you in previous session, in previous webinar, that whenever RSI hit the 70 level, you usually get a top in price action. And you can, okay, you can notice it, this area relates to this area over here, and this area relates to this area over here. So once again, RSI went above the 70 level. We even got a new high in price action. It took out all of these previous old swing highs. So I was expecting a false breakout, plus the RSI also confirmed that. And furthermore, we got the news which I just discussed, which also favored strength in United States dollar, or the DX, so to speak. So we got a drop in price action of euro dollar currency pair. That's what I was expecting. Now, usually when market starts the decline, you never get a straight line. Okay, market always move in up and down wave structures, and it's quite possible that it may be a little bit early, but it's quite possible that we expect a pullback in price action, and then price action is going to uh, print a top and then drop even further. Okay, next one, Australian dollar, Aussie dollar currency pair. Okay, AUDUSD currency pair. Let's take a look at AUDUSD currency pair. Go over to the daily time frame. Okay, so this is what I was expecting, and told you guys that I'm expecting a drop in price action. Let me change the time frame. So here, and if we let me zoom in a little bit. Okay, so I was expecting a drop in price action of AUD USD currency pair, and this is what we got. In fact, on May 15th, we have actually an unemployment rate coming, which I'm going to discuss it in a second. So over here, I was expecting a top and a drop in price action of Australian dollar versus United States dollar currency pair, and market actually started the drop. This is the weekly time frame. Let me zoom out a little bit, and then we have the daily chart. So price actually spiked out a little bit higher. I was expecting a top at 0.6409 over here, but it didn't stop there. It went up a little bit, and now it's starting to drop. Now, we will talk more about the Aussie dollar currency pair um, after a few minutes time, but this is the expectation. Based on this chart analysis, based on previous support and resistance level, the chances are AUD/USD currency pair is most likely going to reach 0.6193 area. Okay, let's go over to the PowerPoint presentation. Okay, so current week macroeconomic events and data releases. The first one is unemployment rate related to Australia, and the currency pair we're going to talk about is the AUD USD currency pair, the Aussie dollar versus United States dollar currency pair. The date and time is May 15th, 1:30 a.m. UTC time. And next one is the prelim consumer sentiment. That's on May 16th, 2 p.m. in USA. Okay, so let's talk about the first macro event and data release. So this is the current week fundamental analysis. What is the unemployment rate? Let's talk a little bit about that. The Australia's unemployment rate reflects the percentage of the labor force that is jobless and actively seeking employment. It is a key economic indicator that offers insights into labor market conditions and overall economic performance. A lower unemployment rate typically suggests economic strength in Australia and can support the Australian dollar, the AUD, while a higher rate may point to economic weakness and weigh on the currency. Now, on May 15th, 2025, the unemployment rate report is coming. The previous number was 4.1%. The forecast is also 4.1%. The actual data did not release yet. So the market anticipates a slight, you know, not even a slight change. Market is, expecting the same number, 4.1%. So this means the Australian unemployment rate, the expectation is that it's going to be remain the same like the previous month, or the previous number was 4.1%. So we expect the same 4.1% this month as well. However, if unemployment rate is higher than the 4.1%, then it means a weaker labor market reading could raise concerns about slowing economic momentum and increase the likelihood of a dovish shift in RBA policy, potentially triggering further downside in AUD USD currency pair. Now, at this point in time, I'm already expecting a top and a drop in price action of AUD USD currency pair. So we will see what the actual number we actually get it on 15th May. However, based on the technical analysis, it's quite possible that we are most likely going to get an increase in unemployment rate in Australia. So traders will closely, monitor the May 15th unemployment report for signs of labor market deterioration or strength. So once we get the actual number, we will get a pretty good idea that what to expect next, a weakness or a strength in Australian dollar. So giving expectations of a slight rise in unemployment, or any confirmation or upside surprise could put pressure on the Australian dollar, aligning with uh, um, the chart pattern, the bearish chart pattern. So the near term for the Aussie dollar is actually bearish as far as the uh, analysis is concerned. Next, let's take a look at the PowerPoint presentation. Next one is the prelim consumer sentiment. The preliminary University of Michigan Consumer Sentiment Index, the UOM is basically stands for University of Michigan. So it's a consumer sentiment index which measures consumer confidence in the US economy. Now, based on the different surveys of households, uh, this number comes out on May 16th, 2025, and it assesses the consumer sentiment for the University of Michigan. In the University of Michigan Consumer Sentiment Index, basically it assesses current financial conditions and expectations for the future and overall sentiment regarding economic health in USA. As a leading indicator, The rising sentiment typically suggests stronger consumer spending ahead, which supports economic growth and can boost the US dollar. Conversely, weakening sentiment may signal slowing economic momentum. The preliminary reading is considered more market moving than the final release due to its time timeliness. Now, on May 16th, 2025, the data will come out. The previous number was 52.2. The forecast is 53.1. So we were expecting a good number, good for the US economy and also good for the United States dollar. The actual data did not release yet, so the expectation is that we will get a higher number. The market is anticipating a modest improvement in consumer sentiment, rising from 52.2 to 53.1. This slight uptick may reflect stabilizing inflation expectations or an improved labor market outlook. However, the overall sentiment level remains relatively low, indicating lingering concerns about the economy. Now, the potential impact on the euro dollar, uh, uh, let's take a look at the euro dollar over here. Um, a stronger number, if we get a 53.1%, the expectation is 53.1%, or let's say we might get a number greater than the forecasted level, then obviously it means that stronger than expected sentiment may point to improving consumer confidence and strengthening the US dollar and putting downward pressure on the euro USD. This means euro dollar is going to drop more. Okay, and if the number comes out and it's less than 53.1 per one number, then it means we're getting a weaker reading, and this could raise doubts about the strength of consumer driven growth in the USA and possibly weighing on the US dollar and supporting a short term move higher in euro dollar currency pair. So the conclusion is the traders will watch this release closely for insight into US consumer attitudes, as it may signal changes in spending behavior and influence expectations for Federal Reserve's policy. If sentiment improves beyond forecast, it could reinforce confidence in the USA economy and favor United States dollar strength. And you expect a drop in price action of euro dollar currency pair. Now, on the other hand, a disappointing number could revive concerns about economic softness, potentially lifting up the euro dollar currency pair. Okay, next let's do the global market trend analysis, and let's start with the euro dollar first. So in euro dollar currency pair, previously we discussed that based on the technical analysis, we got the overbought RSI over here. Okay, so I'm expecting the price action to basically, drop lower. That's the expectation. And market has already started the decline as well, by the way. We might get a retest over here, like price may try to, rise up a little bit before it actually falls back down further. That's possible. Okay. Next one is the British pound versus US dollar. Okay, GBP USD currency pair. Okay, I'm basically expecting uh, the GBP USD currency pair to test this level and fall even further, drop more. This was the level which market was trying to test it. Last week it bounced from this level, from 1.3233 level. So it's quite possible that we might, get a rise in price action, and then it's going to drop after that. So that's the level 1.3233. It looks a bit bearish. Next one is the Australian dollar versus US dollar currency pair. Let's take a look at Aussie dollar currency pair. So based on higher time frame, I'm expecting the price action to drop. It's not easily going to drop. In other words, we're getting kind of a sideways price action going on. Uh, Yesterday was a bearish trading day. Now we got a bullish leg in price action, and maybe tomorrow we get a bearish leg again. So it's kind of a sideways, but overall it's sloping downwards slowly. Next is the spot gold XAU-USD pair. Okay, inside spot gold, this was the bullish trend channel breakdown, and the way I see spot gold is going to drop further now. And let's take a look at a higher time frame. No, this chart looks fine. Okay, so we got this first leg over here, and now market is turning sideways. The way I see price action is probably going to rise up a little bit. It might try to waste some time. It turns sideways most likely, and then the chances are price action is going to drop more. Why I think that way? Because we got a trend channel breakdown in price action over here. Secondly, let's take a look at one more chart over here. Over here we got a breakdown in price action. So this was the support, and many times you see price action tested this level multiple times. Over here, here, and here. Okay, actually got a two hit over here. Anyways, the point is the sellers are in control of the market, and we're actually getting more aggressive sellers than buyers. So price action, it might try to rise back up. It might even try to fill this gap as well. But the overall trend looks down. It looks bearish, and the chances are the spot gold is probably going to drop more. And in other words, I would say that the United States dollar is becoming strong. So that is the reason why the XAU USD pair, meaning the spot gold versus US dollar, this trading instrument is falling down. Okay, so that's pretty much it for today. So I covered today the unemployment rate for the Australia. We also looked at the University of Michigan Consumer Sentiment Index, and I also provided you the analysis and the forecast on Euro Dollar, GBP AUDUSD, and spot gold trading instruments. So these are the assets you need to watch out for profits. What you should do next? Well, stay tuned for the schedule of next week's trading webinar. You can subscribe to our social media pages to stay updated with true exciting events, trading content, and market insights. If you are interested to learn more about trading, visit the Trade Geek and access free trading courses for beginner, intermediate, and expert traders. Thank you for hanging around. See you at the next trading webinar on Tuesday, May 20th, 2025, same time, 12 p.m. UTC time. So that's it for the time being from my side. See you on the next webinar. Have a nice day and bye bye.